Okay, good morning everyone. Let's continue with accounting standard 22. I guess there are no doubts. I have only one doubt which says in practice question H, won't it be a permanent difference? So let's see what is practice question H. Practice question H says that in an expense of rupees 20,000, TDS is not deducted, leading to disallowance to the extent of 30%. So Ishika, this is not permanent difference. This is a timing difference because whenever you will deduct TDS in the future, you will get deduction. So this year you may not have deducted TDS, but next year you will surely deduct TDS. And when next year you will surely deduct TDS, this difference will no longer be there, and that is why it will then be a timing difference, a difference that originates today and will reverse itself in the future. Right? I hope you are absolutely clear with that. Okay, I hope that clears your doubt. We are already done with the study material question 3.152. Okay, so I have one more out which says, isn't it an expense which will have deduction to some extent only? So that is what is explained, that 30% amount, 30% disallowance will be there. So it is not to some extent only, that 30% entirely will be reversed in the future. So whatever difference, it is not about extent, whatever difference originates today and reverses itself in the future will lead to a difference. So you cannot measure in this way that it is partial or full. Any kind of difference which will reverse itself in the future is a timing difference. Okay, I have one more doubt which says in point C, why we will get deduction of excise duty. So excise duty is always a deductible expense, and whatever expense is deductible will result in deferred tax asset or liability. So you will study that why will you get deduction of excise duty when someone will teach you income tax. As of now, you have to remember that excise duty is a deductible expenditure. I hope Raj that is clear to you. Okay, come to page number, come to the institute study material. Come to the institute study material. Let's solve one question from there. Come to a study material question. So illustration 1 is something we have already done. Right now, let's solve. Let's do illustration number 6. Page number 1.115. Let's solve illustration 6. Illustration number 6 on page number 1.115 of your study material. Page number 1.115, illustration number 6. Okay, let's read the question. It says Omega Limited is working on different projects which are likely to be completed within 3 years period. It recognizes revenue from these contracts on percentage of completion method. कहाँ पे पढ़ा ये हमने? Where have we studied the percentage of completion method? Can someone tell me on the chat box? Can someone tell me on the chat box? Where have we studied this? Accounting Standard 10 construction contracts. Okay, so we follow which method? Percentage of completion method for the financial statements of 14, 15, 15, 16 and 16, 17. And what is your revenue? 11 lakhs, 16 lakhs and 21 lakhs. However, for income tax purposes, we adopt the completed service contract method, which has revenue of 7 lakhs, 18 lakhs, 23 lakhs for the years 14, 15, 15, 16, 16, 17. Income tax rate is 35%. करना क्या है? Compute the amount of deferred tax asset or liability for the year 14, 15, 15, 16 and 16, 17. Okay, allow me to solve this question first. You will first understand and then I'll give you time to copy. Right, let's first prepare our format. Of my first statement will be as per accounting standard 22, accounting for taxes on income. You will have year, just see the format that I'm preparing. Let me first solve this question. You only understand how do I solve the question. Then I will give you sufficient time to copy. As of now, just understand what am I doing. Mark this question important. Last day revision question. It is your study material question. Okay, let's begin. And before that, you will help me out with the values. Okay, so if you look at the question that you have, the years that are given is 2014, 15, 15, 16 and 16, 17. So you have 2014, 15, 2015, 16, and 2016 and 17. 3 years have been given. If you look at the accounting income in the question, the accounting income is 11 lakhs, 16 lakhs and 21 lakhs. So let's take over here 11 lakhs, 16 lakhs and 21 lakhs. On the other hand, if you look at the taxable income, the taxable income is 7, 18 and 23. So you have 7 lakhs, 18 lakhs, 23 lakhs. Okay, before you solve this question, it is important to understand whether this difference is timing or permanent. Now they have not given you any reason for the difference. They have only given you the difference. So now it is interesting to find out what is the nature of this difference. Is it timing difference or permanent difference? Now please pay attention from here. What we will do first is we will make a total of the two. So let's take the total of 21 lakhs, 16 lakhs and 11 lakhs. And similarly, let's take the total of 23 lakhs, 18 lakhs and 70 lakhs. 7 lakhs. Quickly, everyone on the chat box, do you find that the difference between the two is the same? Yes or no? Quickly, everyone on the chat box, that the total amount of the two at the end becomes same. Can you all see that the total amount at the end becomes same? The total amount at the end will become same, which means, dhyan dena, which clearly means that there is a difference in 14-15 of 4 lakhs. But that difference at the end of the third year becomes equal, which means the difference that arises today is reversing itself in the end of the third year. Because that difference that originates at one point is reversing itself in the future, this difference is definitely a timing difference. So I'm writing over here, this difference is timing difference. This difference is timing difference because this is the difference that originates in one period and reverses itself in another period. Okay, let's calculate the difference as well. You have 4 lakhs of difference at the first place. Then that difference of 4 lakhs is reversing over here. You have 2 lakhs and finally you have 2 lakhs. Right, now please understand it. This is the interesting part that you have. What kind of difference is it? Is it DTL or DTA? So tell me, in the first year, do you have taxable income more or taxable income less? In year 2014-15, do you have taxable income more or do you have taxable income less? Okay, everyone agrees we have lesser taxable income. Now, because we have lesser taxable income, will we pay more tax or less tax? Will we pay more tax or less tax? Okay, everyone agrees less tax. Okay. Please tell me yes or no. Is it pay less today, pay more in the future? Yes or no? Is it pay less today, pay more in the future? Yes or no? Okay, excellent. Tell me, what is it? DTL or DTA? Perfect. This is DTL. This is DTL. Okay, everyone agrees this is DTL. Okay, can you look at the question and tell me what is the percentage of tax there? What is the percentage of tax that has been given to you? 35%. So let's calculate that. 35%. So you have 4 lakhs into 35%. How much do you get? Calculate 4 lakhs into 35% is how much? You get 1,40,000. 1,40,000. Okay, now please pay attention. This is the second technical part of this question. This is a very good question to understand. It is absolutely simple once you need to understand the concept. So till here, if everyone is clear, let's go to the second year, that is 15-16, and please pay attention. If 15-16 was a standalone question, it was not a connected question. Now this is a connected question. 14-15, 15-16, 16-17. You have 3 consecutive years. So that is why I am calling it a connected question. Say for example, this was not a connected question. This was an individual question. Then I would have thought in this way. If 15-16 mein taxable income is more and accounting income is less, which means I have more taxable income, and because I have more taxable income, I will pay more tax today, pay less in the future. This is DTA. ऐसा मैंने सोचा होता if this was a standalone question. But this is not a standalone question. This is a connected question. This is a question having 3 consecutive years. Because this is a question having 3 consecutive years, you will have DTA, that is right, but you will not write DTA. You will in this case write DTL is now reversing itself. So you will write DTL oblique R into brackets, sorry, not oblique, DTL into brackets, you will write R. You will write DTL R. Which means the deferred tax liability which arises in the first year is now reversing itself in the second year. To what extent? To the extent of 2 lakhs. So 2 lakhs into 35%, which will be how much? 70,000. You have 70,000. And again you have DTL that reverses itself, 70,000. So your final answer comes to nil, because 1,40,000, the difference that arises in one period is now reversing itself from the second year. Are you getting it? Yes, everyone quickly on the chat box. Are you clear with this? Yes or no? Are you all clear with this? Yes or no? Everyone on the chat box. Akshay, Aman, Anjali, Aksa, Bhavin, Dipesh, Dhairya, Dhara, Digesh, Harshit, Harshita, Hit, Ishika, Ishita, Kajal, Manav, Nidhi, Nikita, Pavan, Pushti, Raghav, Raj, Rizwan, Rohan, Samira, Shifa, Simran, Om, Spruha, Shrushti, Tulsi, and Yash. Are you all clear with this? If you're clear with this, I have put this on your WhatsApp group. Please take it from there. I have put this question on the WhatsApp group. Take it from there. Once you're done, please say done on the chat box so that we can go to the next question. take it down properly. If you have any doubts, please ask me. Once you're done, please say done on the chat box so that we can proceed to the next question. Okay, perfect. If you all are done with this and if you have no doubts, let's go to practice question 3. So come to practice question 3. Practice question 3, which says depreciation as per income tax is 3 lakhs, depreciation as per accounts is 5 lakhs. Excess amount paid to a relative is 10,000 disallowed as per income tax, and unamortized preliminary expenses as per tax records is 50,000. Tax rate is 20%. करना क्या है? Calculate DTL oblique DTA. So let's prepare a proper format. Solve this question along with me. Prepare a format along with me. Put your first statement as per accounting standard 22, accounting for taxes on income, calculation of DTL oblique DTA. Prepare a systematic format. You have particulars, amount, difference, deferred tax, and finally the amount. Solve this question along with me. It's a very simple question, a question that we have already done earlier. Okay, let's begin. The first one says depreciation as per tax is 3 lakhs, depreciation as per accounts is 5 lakhs. So you have more depreciation as per accounts. So I will put over here excess of depreciation as per accounts 5 lakhs minus 3 lakhs. You get 2 lakhs. Everyone on the chat box, depreciation, timing difference or permanent difference? Depreciation is timing difference or permanent difference? It is, of course, a timing difference. DTL or DTA? Now that is the question. Now you have more depreciation as per accounts, which means you have lesser depreciation as per tax, which means you have more income as per tax. You will pay more today, pay less in the future. Pushti, it should be DTA and not DTL. So Pushti, it should be DTA and not DTL. So this is deferred tax asset. What's the tax rate given in the question? 20%. So you will take 2 lakhs into 20%. How much do you get? 2 lakhs into 20%? 40,000. So put over there 40,000. Next, you have excess amount paid to a relative, rupees 10,000. That's your next point. Excess amount paid to a relative, rupees 10,000. Now please understand this. As per as per section 40A2B of the Income Tax Act, it says that if there is any expense that you have paid to a relative which is more than reasonable, is to be disallowed permanently. This extra amount will never ever be allowed as per the Income Tax Act. Are you understanding? Which means if there is say for example an expense that usually is 10,000, but to my relative I pay 15,000, so that extra 5,000 will never be allowed as per income tax. It will be disallowed. Now this expense, which will never be allowed in the future, will never reverse itself in the future. So this is permanent difference. This is your permanent difference. Are you getting it? Very simple point it is. It is your permanent difference. Let's look at the last one. You have unamortized preliminary expenses as per tax record. So unamortized preliminary expenses. You have unamortized preliminary expenses as per tax records. How much is the amount of unamortized preliminary expenses as per tax records? You have 50,000. 50,000. This is definitely a timing difference. Now it is unamortized as per tax records, which means we have not debited the P&L as per income tax, which means profit is more, which means tax is more, which also means pay more today, pay less in the future. This is DTA. 50,000 into 20%. You will have 10,000. You have net DTA of 50,000. You have net DTA of 50,000 rupees. Are you all clear with this? Yes or no? Everyone on the chat box, are you all clear with this? Yes or no? Okay, if you all are clear with this, take this down properly. If you have any doubts, please ask me. I'm sure you were solving this question along with me. So once you're done finishing the question, please say done on the chat box so that we can go to the next part of this question. You have this question on your WhatsApp group. You can also have a look at it from. Once you're done, please put done on the chat box so that we can proceed. Okay, if you all are done and if there are no doubts, let's proceed to the next one. Let's go to question number 4. Question number 4. Let's do practice question 4. Let's do practice question 4. Okay, now this question is a very simple question, pertains to everything that we have already done. So I would want someone of you to solve it for us. Okay, let's see who can solve this question for us. Okay, Yash, can you try this question for us? On the chat box, Yash, can you try this question for us? Please quickly respond to us on the chat box if you can solve this question. Yash, can you try solving this question? Okay, Nikita, can you try this question? Question number 4. Okay, Nikita, here you go.
Yes, sir.
Okay, so you have question number 4. I hope now you can see the question.
Yes.
I'm reading the first part of for you. You solve it part wise for us. So the first one says depreciation as per accounts 5 lakhs, depreciation as per tax 4,30,000. Go ahead.
Sir, depreciation as per tax is less, so we are going to pay more tax today.
Okay, wait. So let me put over here. You have excess of depreciation as per accounts or tax. Where is it more?
Accounts. Accounts.
How much?
5 lakh minus 4 lakh 30,000.
So the difference amount is 70,000.
70,000.
Okay. Uh, Tell me, depreciation, is it a timing difference or permanent difference?
Timing difference.
Perfect. Now tell me, DTL or DTA?
DTA.
How DTA?
We are going to pay tax, more tax today, and thus we will pay less tax in the future.
Okay, so you have more depreciation as per accounts, which means lesser depreciation as per tax, which means more profit as per tax. You will pay more tax today, you will pay less in the future. This is DTA. Okay, can you tell us the amount as well?
Yes.
What's the rate of tax?
40%.
40%.
28,000.
How much? 28?
28,000.
Perfect. Next one I am reading for you. Depreciation as per accounts 1 lakh, depreciation as per tax 3 lakhs. Now what will you do?
Excess depreciation as per tax.
So this time you have excess depreciation as per tax. Just
Elect
give me a minute. How much excess depreciation do you have?
3 lakh minus 1 lakh.
You
2
have
lakh.
3 lakhs minus 1 lakh. Okay, so your difference amount is
2 lakh.
2 lakhs. Timing or permanent?
Timing.
Now tell me, DTL or DTA?
Less profit as per tax, so we are going to pay less tax today, and we are going to pay more tax in the future.
So this is
DTL.
excellent. This is deferred tax liability. Okay, you have 2 lakhs
Take into
into
40%.
40%,
80,000.
get 80,000. Okay, perfect. Let's go to the next one. Excess amount paid to a relative 5,000. Excess amount paid to a relative 5,000. Tell me, is it timing or permanent?
Permanent.
Why permanent difference?
Because it is not allowable as per tax. It is
This difference
not
will never reverse itself in the future. Because it will never reverse itself in the future, this is a permanent difference. What do you do with permanent difference?
ignore.
Ignore it. Okay. Next one. Amount paid in excess of 20,000 in cash, rupees 23,000. So there is one provision. Now this I'm sure you all are not aware. There is one provision in income tax which says that if you pay any amount in excess of 20,000 in cash, that amount is always disallowed. You will never get deduction for that. How much have you paid in total in this question, Nikita, in cash?
23,000.
23. Does that exceed 20,000?
Yes.
Yes. So entire amount will be disallowed. So how
Okay.
much will be disallowed?
23,000.
23,000. Okay. Now, since I have explained the provision to you, Nikita, tell me, timing difference or permanent difference?
Permanent difference.
Permanent difference, because this difference will never reverse itself in the future. So you will write over your amount paid in cash exceeding 20,000. 20,000. Okay. Is there anything else that you have? Unamortized preliminary expenses as per tax records 50,000. Yes, go ahead.
Unamortized preliminary expenses as per tax.
How much do you have?
50,000.
50,000. Tell me, timing or permanent?
Timing.
This is a timing difference. DTL or DTA?
DTA.
DTL or DTA?
DTA.
DTA, because you have unamortized preliminary expenses, you have not debited the P&L, you pay more today, you will pay less in the future. This is DTA. Okay, tell me, how much?
50,000 into 40%, 20,000.
You get 40,000, right?
20,000. Oh,
20,000. So you will have 20,000 over here. What's your net, DTL or DTA?
DTL 32,000.
How do you get net DTL?
28,000 minus 80,000 plus 20,000.
So you have net DTA or DTL?
DTL.
Net DTL will be 80,000 minus 28,000 minus 20,000. You get 32,000?
Yes.
Okay. Perfect. Thank you, Nikita.
Okay, sir.
Are you all clear with this absolutely simple question? You had one new point. You had only one new point. Now, there is one good question that I have. Please understand. It says in second point, DTL will not be adjusted by first DTA and balance 52,000 to DTL. No, Shifa, that will not happen. I'll tell you why. This is not a consequent question. These are all independent cases. Yes, bro, you're right. These are all independent cases. Because they are independent cases, you take each case individually. And after taking each case individually, just find the net DTA or DTL. Because in 1 year from independent cases, you will not have reversal of DTA, but you can have either DTA or DTL, anyone. So I hope Shifa and Sprua, that solves your doubt. Take this down properly. It is on your WhatsApp group. Once you're done with this question, please put done on the chat box. so that we can go to the next question. Okay, if you all are done, let's go to the new concept. But before that, I have one doubt, which is a good doubt. So let me solve it let me discuss it with everyone. It says, how can we have excess depreciation as per accounts and as per tax both? And then we net it off? Okay, that's a good question. Now, please understand. You may have two assets in the question. In one asset, you may have excess depreciation as per tax. In the other asset, you will have excess depreciation as per accounts. So you can have in one question both in one asset excess as per tax, in one asset excess as per account. So you may have both. Now because you may have both, you will have both in one question. So that is of course possible, and of course you will always net it off in case of DTL or DTA, right? So I hope, Spruha, that solves your doubt. Okay, perfect. Let's come to a new concept now. Conditions for recognizing deferred taxes. Okay, let's understand that. Please pay attention. I will explain the concept to you, but after that, every question you all will solve for me, because that is how important and interesting this concept is. So please pay full attention to this. It's a very simple concept, provided you understand it properly. It says conditions for recognizing deferred taxes. Deferred tax liability is to be recognized without fulfilling any conditions. So no need to fulfill any conditions. You can directly record deferred tax liability. For deferred tax asset, you have to follow some table. Now please understand this. Deferred tax liability can be recognized without any condition because of the prudence concept. Provide for all the expenses, losses today. But deferred tax asset, you need to follow some conditions, because you can never anticipate your gains as per the prudence concept. So it is because of the prudence concept that we have this concept over here, conditions for recognizing deferred taxes. Okay, it says deferred tax liability to be recognized without fulfilling any conditions, and deferred tax asset, you need to follow the given table below. Let's understand that. Deferred tax asset. If deferred tax asset is on unabsorbed depreciation or taxation loss, मतलब deferred tax asset आपका क्यों आया, depreciation या taxation loss की वजह से अगर आता है, तो firm has to be virtually certain. Virtually certain means 100% certain. We have studied this in AS-29. The firm should be virtually certain that there will be sufficient taxable profit in the future. Only then you can recognize a deferred tax asset. Otherwise, you cannot recognize a deferred tax asset. Right? Again, if you have deferred tax liability, you can recognize without fulfilling any conditions. But if you have deferred tax asset, because of unabsorbed depreciation or taxation loss, then you have to be virtually certain that there will be taxable profit in the future against which this deferred tax asset can be set off. Come to the next one. If you have DTA other than depreciation or taxation loss, then the firm has to be virtually certain that there shall be sufficient taxable profit in the future. What is the meaning of virtual certainty? Virtual certainty is 100% and reasonable certainty is 50% sure. So the firm has to be reasonably certain that there will be sufficient taxable profit in the future. Come to the third one, deferred tax asset on loss under the head capital gains, and there is unabsorbed depreciation or taxation loss also. So if there is loss under the head capital gains and you also have unabsorbed depreciation, then again the firm needs virtual certainty that there shall be sufficient capital gains in the future. If there is only loss under the head capital gains, but there is no unabsorbed depreciation or taxation loss, then the firm again needs reasonable certainty that there shall be sufficient capital gains in the future. Are you getting it? Absolutely simple it is. Let's quickly summarize and revise it. What are the conditions for recognizing deferred taxes? Deferred tax liability कुछ भी हो जाए आप recognize करोगे, कोई condition satisfy करने की जरूरत नहीं. However, for deferred tax asset, they have given you a proper table. If deferred tax asset is because of unabsorbed depreciation or taxation loss, then you need virtual certainty that there will be sufficient taxable profit in the future. If you have virtual certainty, you will recognize this DTA. If DTA is because of other than depreciation or taxation loss, then the firm needs reasonable certainty, 50% or more. If there is loss under that capital gains and there is also an absorbed depreciation, follow the same method, virtual certainty. If there is loss under the head capital gains, but there is no unabsorbed depreciation, follow the same method. You need reasonable certainty. Right, quickly, everyone on the chat box. Are you clear with this? Yes or no? Are you all clear with this? Yes or no? Quickly, everyone on the chat box. Akshay, Aman, Anjali, Aksa, Dipesh. धैर्य, धारा, दिगेश, हर्षित, हर्षिता, इशिका, इशिता, मानव, निधि, निकिता, पवन, पुष्टि, राघव, राज, रिजवान, रोहन, समीरा, शिफा, शिवाय, सिमरन, Om, Spruha, Shrushti, Tulsi, and Yash. Are you all clear with this? Okay, I have one doubt which says, what is the meaning of taxation loss? Taxation loss means you have loss as per the profit and loss account as per the Income Tax Act. You have loss in the profit and loss account as per the Income Tax Act. That is known as taxation loss. Now, I am sure you have not been taught this, so let me explain this properly to you. Whenever there is loss as per income tax, that loss can be carried forward for 8 financial years, right? So 8 assessment years, that is what you call as per the Income Tax Act. Someone will teach you that when you study section 72 of the Income Tax Act, set off and carry forward of losses. So that will be taught to you. As of now, you have to understand that if there is loss as per the Income Tax Act and it leads to deferred tax asset, then you need some conditions. Right, okay. Now you have question number 5 in which you have 10 questions. So I need 3 students to solve it for me. You will understand the question carefully and I want 3 students to solve it for me. So quickly, one, Akshay, can you help us solve this question? Yes or no? Quickly on the chat box. Akshay, can you help us solve this question? Okay. Dhairya, can you help us solve this question? Dhairya, can you help us solve question number 5? Okay, excellent. And Samira, can you help us solve this question? Samira, can you help us solve this question? Okay, if not Samira, then Harshit, can you help us solve this question? Harshit, can you help us solve this question? Quickly on the chat box. Harshit, can you help us solve this question? Okay, fine. Spruha, can you help us solve this question? Perfect. Here you go. Spruha, Dhairya, and Akshay.
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
Let's begin with the first one and let's begin with Dhairya. I'm reading the question. All 3 of you will understand carefully and one by one you will reply. Question samajhna. Everyone, your focus should be on the question. It says recognize when DTL or DTA should be recognized in the following cases. Either use I, matlab immediately. VC, matlab virtual certainty. And RC means reasonable certainty. तो आप मुझे बताओगे DTL या DTA कब recognize करना है? क्या हमें immediately recognize करना है? क्या virtual certainty पर recognize करना है या reasonable certainty पर recognize करना है? Right, I hope this question is absolutely clear to all 3 of you.
Yes, sir.
Yes or no?
Yes, sir.
Yes, sir.
Okay, perfect. Let's begin with Dhairya. Dhairya, DTL of rupees 10,000. Tell me.
Sir, it should be recognized immediately as per the prudence concept. Provide for all losses today, but never anticipate future gain. As it is liability, it should be recognized immediately.
Perfect. DTL will be recognized immediately because, as per the table, deferred tax liability is to be recognized without fulfilling any condition. Okay, perfect. Akshay, DTL due to unabsorbed depreciation of rupees 10,000.
DTL recognize immediately.
Okay, any DTL will be recognized immediately, even if it is because of unabsorbed depreciation, does not matter. DTL means you will always recognize immediately. Okay, very good. Third one, SPRUA. DTA rupees 10,000 is due to unabsorbed depreciation.
Virtual certainty.
Okay, so you will record this only when you have virtual certainty. Okay, perfect. Dharya, DTA due to
Yes.
taxation loss.
It should be virtual certainty.
When? DTA due to taxation loss will be recognized when?
Virtual certain.
Okay, virtual certainty. Perfect. Akshay, DTA due to preliminary expenses 20,000.
Recognized as a reasonable certainty.
At the time of reasonable certainty. Okay, very good. Sprua, DTL due to taxation loss.
Uh, since it is DTL, we should recognize it immediately.
You will recognize it immediately. Okay, very good. Dharya, DTA due to capital loss. There is also unabsorbed depreciation.
Virtual certain.
Virtual certainty, because there is capital loss plus there is unabsorbed depreciation. Okay, excellent. Akshay, DTA due to capital loss only.
At a reasonable certainty.
How reasonable certainty?
So only capital loss.
Okay, what if it was capital loss and taxation loss?
Taxation. तो
अगर capital loss और taxation loss दोनों होता तो आप कब record करते? Look at this.
virtual certainty.
Virtual certainty. Very good. Tua, due to capital loss, there is taxation loss as well.
Virtual certainty, sir.
Virtual certainty. And the last one, Maria, DTL due to capital gains.
Since it is DTL, it should be recognized immediately.
Okay, excellent. This will be recognized immediately. Perfect. I think everyone is clear with this. Okay. Thank you, Akshay. Thank you, Dharya, and thank you, Spruva.
Thanks.
Thank you, sir.
Thank you, sir.
Okay, are you all clear with this? Is everyone clear with this? Yes or no? On the chat box. If you have any doubts, please ask me. Are you all clear with this? Yes or no? Okay, I have one doubt which says in this question, it doesn't matter if we have taxation loss or not. It will be virtual certainty only. So, Dhara, please understand. If it is DTA because of taxation loss or unabsorbed depreciation, it has to be virtual certainty. And if it is DTA due to capital gains loss and there is unabsorbed depreciation or taxation loss, it has to be virtual certainty. That is what it means. I hope that is clear to you, Dhara. Okay, perfect. If everyone is clear with this and there are no doubts, let's go to question number 6, 7, 8, 9, and 10. So we can again have two of you solve it. So Anjali, can you try these questions for us? Okay. Dhara, can you try these questions for us? Yes or no? Okay, here you go. Let's begin. Okay, let's begin, and we begin with Anjali. We are doing question number 6. I am reading the question for you. You will reply accordingly. Please listen to the question carefully. It says, in a particular case, there arises DTA due to taxation loss, and the firm is virtually certain that there will be sufficient taxable income in the future. Tell me, should DTA be recognized, yes or no?
Sir, since there is virtual certainty 100% and it is taxation loss, so DTA can be recognized.
Yes, go ahead. There is virtual certainty then.
Virtual certainty and it is taxation loss. So the condition is satisfied that virtual certainty should be there. So we can recognize DTA.
Okay, perfect. You will recognize DTA in this case. Okay, Tara, come to the next one. In a particular case, there arises DTA due to unabsorbed depreciation, and the firm is reasonably certain about its profits in the future. Should DTA be recognized, yes or no?
No, sir, because it is unabsorbed depreciation, so the firm should be virtually certain for the taxable profit in future.
Okay, perfect. So the answer is yes or no?
No.
Okay, very good. Anjali, next question. In a particular case, there arises DTA on account of loss under the head capital gains and unamortized preliminary expenses. The firm is reasonably certain about its future profit. Should DTA be recognized?
So 1 minute. In a particular case, there are DTA of loss. And there is.
Please read the question carefully. Do not skip any alphabet. I'm reading it again for you. It says, in a particular case, there arises DTA on account of loss under capital gains and unamortized preliminary expenses. The firm is not reasonably certain about its future profits. Should DTA be recognized?
So under loss under capital gain, the firm should be virtually certain, but here they are not reasonably certain, so not recognized.
Are you sure of what you're saying?
Sir, I don't know about preliminary expense.
So, see, you need not know about preliminary expenses. All you have to understand is loss under the head capital gains के साथ अगर taxation loss या unabsorbed depreciation है तो हमको क्या चाहिए?
तो reasonably
virtual
certain,
right?
Oh.
और मान लीजिए अगर loss under the head capital gains है और उसके साथ anything other than depreciation and unamortized depreciation and taxation loss है तो आपको क्या चाहिए?
Reasonable certainty.
Reasonable certainty. Is preliminary expenses other than those two? Yes or no?
Yes.
So what do you need?
Reasonable certainty.
Do you have reasonable certainty over here?
No.
Should you recognize DTA?
No.
Are you understanding?
Yes,
so you will always think in this way. DTA due to capital gains. Okay. Do you have it because of taxation loss or unabsorbed depreciation? No. Then you need reasonable certainty. Do you have that? No. So the answer is no over here. Are you getting that?
Yes, sir.
Okay. Dhara, next one is for you. In a particular case, there arises DTA on account of unamortized preliminary expenses, and the firm is 30% sure of its future profit. Should DTA be recognized?
No, because over here the unamortized preliminary expenses of other items specified, so it should be reasonably certain, that is 50%. And over here it is given 30% surety of its future profit. So answer is no, it should not recognize.
Okay, perfect. No, because the firm should be reasonably certain for their future profit, which is 50%, and we have only 30% over here. Okay, let's solve the last one, I guess. Yes, this is the last one. Question number 10. In a particular case, the firm has DTL and it is 5% sure of its profit. Anjali, should DTL be recognized?
Sir, since it is detailed, so no percentage is required. It is immediate recognition as per prudence concept. So yes, it will be recognized.
Okay, perfect. So 5%, 10%, 50% does not matter. If it is DTL, you will recognize it immediately. So the answer is yes. Okay, perfect. Thank you, Anjali and Dara.
Thank
Thank you.
you.
Right, are you all clear with this? Quickly on the chat box, yes or no. Are you all clear with this? Is everyone clear with this? Akshay, Aman, Anjali, Aksa, Dipesh, Dhairya, Dara, Digesh, Harshita, Ishika, Ishita, Manav, Nidhi, Nikita, Pavan, Pushti, Raghav, Raj, Rizwan, Rohan, Samira, Shifa, Shivai, Simran, Om, Spruha, Shrushti, Tulsi, and Yash. Are you all absolutely clear with this? Okay. Now, if you all are clear with this and if there are no doubts, let's go to the study material for one question. Now, illustration 1 we have already done. Illustration 2 we will do later because I need to explain a concept to you. So probably we'll do it on Sunday when you have the next lecture. Illustration number 3. Let's solve illustration number 3. And illustration number 6 we have done. So let's solve illustration number 3. Let's solve illustration number 3. Illustration number 3, study material question, which is on page number 1.113. You have page number 1.113. Let's read this question. It says, Ultra Limited has provided the following information. Depreciation as per accounting records 4 lakh, depreciation as per tax is 10 lakhs, unamortized preliminary expenses as per tax records is 30,000. There is adequate evidence of future sufficiency profit. What does this mean? On the chat box. इस statement का मतलब क्या है? There is adequate evidence of sufficient profits of future profit sufficiency. It means there is virtual certainty. अगर DTA आएगा तो आप उसको रिकॉर्ड कर सकते हो. क्यों? क्योंकि हमारे पास क्या है? Virtual certainty. Right, okay. करना क्या है? How much deferred tax asset oblique liability should be recognized as transition adjustment when the tax rate is 50%. Okay, again, this is a question we have done. Let's see if someone can solve it for us. Aman, can you try this question for us? Quickly on the chat box. Aman, can you try solving this question? Aman, can you try solving this question? Okay, here you go.
Good morning, sir.
Okay, yes, good morning. We are doing question number 3. I am reading the question for you, but before that, let me just quickly prepare the format and then we proceed. Okay, yes, let's go ahead. You have first depreciation as per accounts 4 lakh, depreciation as per tax is 10 lakhs. Tell me, how will you solve it?
Sir, depreciation as per tax record is more. So the tax which we will pay in present is less,
Wait,
and
let's go
in
step
future
by
we will pay more.
Let's go step by. You have excess depreciation as per tax. How much excess do you have?
6 lakhs.
So you have 6 lakhs. Just follow the format. Tell me, depreciation, timing difference, permanent difference.
Timing.
Why timing?
Because it will reverse itself in future.
It will reverse itself in the future. Okay, now tell me, DTL or DTA?
It's DTL.
Okay, how DTL?
Because we are paying less in present and we will pay more in future.
Okay, so your depreciation as per tax is more, which means your profit is less. Resultantly, your tax is also less. You pay less today, pay more in the future. This is DTL. What's your tax rate in the question?
Sir, can you show the question again, please? One minute. 50%, sir.
50%. Okay. What's your amount of DTL?
30,000.
30,000?
Oh, sorry. Tax 3 lakhs.
3 lakhs. Okay. Perfect. What about the next one? Unamortized preliminary expenses as per tax records is how much?
30,000.
30,000. Okay. Tell me, how do you treat this?
Sir, it's a timing difference.
What is the amount?
30,000.
You have 30,000. Timing or permanent?
Timing.
DTL, DTA.
DTA.
DTA. Okay. What's your tax rate?
50%.
So it comes to 15,000.
Yes, sir.
Okay, tell me, net DTL or net DTA?
Net DTL.
How much?
Sir, 2,85,000.
How do you get 2,85,000?
Sir, 3 lakh minus 15,000.
Okay, what if DTA was 3 lakhs and DTL was 15,000? What would have been your answer net?
DTA.
Okay, that amount would have been?
Sir, can you repeat the question, please?
So it would have been DTA 3 lakhs, DTL 15,000.
Sir, the amount would be the same, 2,85,000.
Perfect, perfect. Thank you, Aman. Thank you.
Thank you, sir.
Okay, simple question it was. We have done this kind of a question earlier as well. Right now, before you copy, I just want to discuss one more thing with you. Look at this question that you have over here. Your preliminary expenses 30,000 and your excess depreciation as per tax 5 lakhs minus 2 lakhs. Have we done this question 1,35,000 जिसका answer आता है? Quickly on the chat box, yes or no. Have we done this kind of a question? It is an exactly repeated question, a question that we have already done from the study material. So it's the same question. So because it is a repetitive question, let's avoid it because we've already done it earlier. Right. So now understand one thing carefully. We have done a lot of concepts today, new concepts pertaining to when to recognize DTA. Now in this accounting standard, you're left out with one question, this illustration number 5 of the study material. You're left out with transitional provisions, that is absolutely easy, and these 3 formulas. And then you have the last concept, which is tax holiday period. So I'll have to first explain to you what a tax holiday period has to be. And then one study material question, and then you have minimum alternate tax. So I think in the next lecture on Sunday, we should be in a position to finish off accounting standard 22. What you will do today is you will go back home, revise whatever we have done, and if you have any doubts, you will come back to me. I will copy this solution that we just did on your WhatsApp group so that you can copy it. I think this much is sufficient for today. What you will do is you will go back today and revise the entire concept, whatever we have done. If you have any doubts, please get back to me and I will solve it for you. Right? Thank you so much for attending. I will now see you next time. Please copy this solution from your WhatsApp group, and if you have any doubts, please get back to me. I am putting it on your WhatsApp group. First, you will take this down. You will revise the entire concept today, entire accounting standard. And if there are any doubts, you will get back to me. Right? Thank you so much for attending. And I will now see you on Sunday. Thank you.